All right. Hello, everybody. Welcome back to another episode of the Market Futures. It's been 2 weeks since we did the Futures show. 2 weeks ago, it was Sunday for Thanksgiving, and the week after that, I got sick, but I am back. Happy to be back. It's always fun to do these on a Sunday and get ready for what hopefully will not be a tumultuous week as we enter the week before Christmas, which is kind of crazy in and of itself to say. That this is the week before Christmas. This is the third week of December. We have then the fourth week. We're going to have a shortened week because of Christmas. And so realistically, I think a lot of decisions around how we are going to end out the year, what the S&P is ultimately going to do, kind of if we end out risk on, risk off. We've got Bitcoin red, futures red right now. We're going to see how that kind of turns out to be tomorrow morning. And we got a bunch of headlines to discuss in terms of what could end up being red or green for tomorrow. But this is going to be the big week. And we got a lot of data coming out this week. We have a lot of Fed talk this week. You have potentially a new Federal Reserve Chair announcement by Trump this week. You have CPI this week. You have jobs data on the 16th in 2 days. So there is a lot of stuff going on this week. As you can see right here, Bitcoin, 88,314, as that is down about $2,000 on the day, down about 2%. So it's going to be a big week, and hopefully it is a week that is a bit prettier than what we saw on Friday. We'll also recap what we had on Friday. Futures went green. Oh, last time I saw them, they were red. Let me pull them up again. They were actually green when they opened, and then they turned red within 30 minutes. Bitcoin is not. Oh, no, they went green. There you go. They did go green. Oh, that's nice to see. It has been 2 weeks in a row of red futures. Yeah, there you go. Futures are indeed green. So we're going to talk about what's going on with those futures as we get into it. And hopefully it implicates the rest of the week. But also, we had a crazy Friday. I mean, just an absolutely crazy Friday. For those that missed it, we had a headline around OpenAI and Oracle. We'll dissect that headline again. That headline in and of itself, there's the futures right there going green, completely changed the trajectory of the day, even though the headline, in my opinion, was a nothing burger, but we'll go through it. Had a couple of banks put out their reports on how they think of the headline. We'll see if the market actually wants to interpret it as a big deal or if it ends up becoming not that big of a deal. Thank you, everybody, for being here. Got a lot to talk about. Hopefully, everyone had a great weekend. I hope people enjoyed the stream on Friday with my new manager. Shout out to Jess. We officially launched details for the meetup. I'm putting the link right here in the chat. It is also in the description. So New York City, February. It's technically New Jersey, but it's like really close to New York. So, I mean, let's just call it New York, New Jersey meetup. But there's the link right there in the chat. February 1st. It's going to be very, very excited. We already have a bunch of you that signed up for it. And yeah, that is officially live. We had a couple of other announcements that went live during that stream. So if you haven't watched it, I would definitely recommend checking it out. And we are officially starting this new era of essentially, I guess, a more structured and organized way to manage AK Media, which is not even really a thing, but nonetheless, it has become a thing. So I'm very, very excited for it. Jess really enjoyed the stream. It was fun. Obviously, the comments were phenomenal, to say the least. But it was a good time. It was exciting. And, as someone who is going to be intimately involved in the community, given how, close of a community we have, I do think it was important for her to meet the community and, kind of see you guys up in front in the chat. And obviously she'll be at the meetups. And so it'll be super fun to get things going. So I think it was a good time. We got a lot of work to do. We got a lot of stuff that we had. We had a meeting Saturday morning right after that stream on Friday to get even more logistics. This is what I love about her. Like, she works really hard, dude. Like, really freaking hard. So Saturday morning, it was like, all right, we got 5 things we got to get off the checklist. Like, and this is what I think I've been missing. A lot of building the brand has been me and my work ethic, trying to make things happen, which I think I have a relatively strong work ethic, but there's only so much you can do before, you just burn out a little bit, and you need someone to take a lot of the load off what you're trying to get done. So very excited for this next evolution of the brand. And I think 2026 will be very exciting, and we'll get things going from there. All right. So we got a lot to talk about, dude. Football today. Crazy. Rest up. Patty Mahomes tore his ACL. I mean, that was tough to see. That was very, very, I didn't watch the whole game, but I got like the details right at the very end of it. End of a dynasty for the Chiefs. I mean, 3 Super Bowls in the past 5 years. I think they got to the AFC Championship round pretty much every time over the past like 7 years or something like that. Now they can't even make the playoffs. So yeah, sucks for Patty Mahomes, but he's an absolute winner, absolute champion. You know, ironically, Tom Brady in his 9th season also had an injury. So in Patrick Mahomes' career, and by then he had already won 3 Super Bowl titles. So Patrick Mahomes and Tom Brady, their careers are kind of going in the same trajectory. But yeah, Chiefs are going to be out for the football season now. All right, so we got about 9 minutes until the futures open. Again, thank you everybody for being here. I think we'll get started with a recap of what happened on Friday, and then we'll keep going from there, and we'll discuss how we think these futures will open. Usama says already bought tickets. Excited for my first meetup. Usama, excited to see you there. Lasone Life says bought tickets. Thank you. Excited to see you there. The tickets will cost $75. Try to make them super cheap. We do have a lot of costs to cover in terms of venue, food, etc., security. So yeah, we're not really making a margin on the 75. In fact, even after I did all the numbers, I think I'm probably going to lose a couple grand on this, but that's okay because the goal of the meetups are to strengthen and establish this community more so than make money. Maybe one day in the future we have events that actually make money, but it's not the time for that. So very excited for those that show up. And if you want to make a trip out of New York, 12 to 6, February 1st. Hopefully this can be on your agenda. And I think it'll be a fun time to see everybody that comes there. All right, so let's get started. What happened on Friday? Link for the meetup. Yes, it's in the description. Let me put it right here in the chat as well. I know a lot of people are going to ask for the link, so let me just put it in the chat. But this is the link for the meetup. So on Friday, everything was going good. And then we had a market downturn, kind of. I mean, it was a 1.5% move on the S&P 500. Then it ended up down 1%. Robinhood got hit. BM&R got hit. Broadcom, just absolutely disgusting. Now, Broadcom, I don't think was necessarily related to just like the Friday price action. I think that, you know, they said some stuff on the earnings call that wasn't the best to say in terms of the OpenAI partnership. So that's why it went down 12%. We'll recap that. But what realistically happened is that Oracle apparently, they didn't announce this, but some media brand came out, I think it was Bloomberg, that said Oracle and OpenAI are delaying the data centers that they had ready to start for 2026. Now, Oracle came out and said there was no plan for 2026. We are online with whatever expectations that we were supposed to have. All milestones are still in track. And then they said if there were any like logistical concerns, it would be about labor and material, which is a sort of like a, I guess you could say a supply concern. Because labor and material, you know, that's part of the supply to be able to build out a data center, aka the jobs and the actual infrastructure needed to put a data center online, not demand. So Oracle said our delivery timelines are fine. There's no delays. All milestones are on track. And if there is any issues, it has to do with supply, not demand. Market didn't care. Market didn't care. Market still ended up going pretty red. And the problem with kind of that headline is it once again brought into question, here's the futures right here going green, the nature of this AI bubble. So I think futures going green right here and maybe opening green tomorrow if we can continue this momentum is a potential reversal of the downside that we had on Friday, which absolutely was annoying. I think it kind of just whipsawed all of us as well. Like that was the annoying part because we hit all-time highs on Thursday after hours. Now, maybe we hit all-time highs because Broadcom was pumping and then Broadcom ended up dumping, so things ended up reversing. But to kind of get the Nvidia to go from 190 to 175 within 24 hours. That was pretty annoying. You know, Hood 135 to 119. That was annoying. Iran got hit from 47 back to 40, closed 9 cents above 40. Google down to 309 because Broadcom fell. Amcor 47 to 44. Amazon 232 to 226. Tesla's ironically the only one that held up. And we do have some Tesla headlines over the weekend, so we'll talk about that. It looks like the robo-taxis without a driver are starting to be seen in Austin. But obviously everything else got hit. So the question now is how much of that Oracle OpenAI AI headline does the market actually care about? Is it a larger concern around data center build out? Is the AI trade just getting exhausted towards the end of the year? Or do we rally? Do we really rally towards the end of the year? Can we get this Santa Claus rally? Can we get momentum? Can we get fund managers that want to buy in as they get towards the end of the year? And do we make a run for 7,000? Which honestly, we should do a poll right here in the chat to see kind of how people are thinking. I'm honestly 50-50. I want to say, yes, we have that end of year run. But then you just look at the fragility of the stock market when this honestly BS headline around OpenAI and Oracle comes out and everything just takes a hit. Like it's one of those things where it's like, well, we're not necessarily at 630 on the S&P. We're at 681. We're basically, 1.2% away from all-time highs. That's not insanity. For the world, for the market to close at that level towards the end of the year, even close to like 685 or something, like that's a 17% year on the S&P. You got to take that. I know a lot of people are expecting that 7,000 or at least that 695, that 20% back-to-back year, which would be incredible. But the market is fragile. And so if we get another one of these stupid headlines towards the end of the year, that might stop us from getting there. So end of year rally, yes or no? Or I should put yes, no, or flat. AKA no would mean we end the year red from these levels. So call it 681 and below. Yes means probably make a run to that 690 level. Flat means we stay 681 to 685, nothing too crazy in terms of run on the S&P. Which right now, we got a lot of updates this week in terms of different headlines coming out. So hopefully those headlines will be more bullish than not in terms of CPI, jobs, et cetera. We did get the most bullish rate cut, or I should say dovish rate cut that we've gotten in history, or not in history, but at least in 2025. I mean, you did not have Powell being as dovish as he was outside of Wednesday. And even that wasn't enough because of the market's concerns about the AI headlines. And so I think starting tomorrow, we'll at least get to see how this ends up playing out. Yes, tax loss harvesting is probably already a thing. People have probably already started that. I don't know if it's going to be that much of a concern towards the end of the year. I think realistically, the concern now towards the end of the year is the AI trade. And we'll talk more about it. We got 3 minutes until the overnight markets open, but I don't think it has to do with the Fed anymore. I don't think it has to do with liquidity. Maybe it has to do with shutdown concerns coming back. Maybe it has to do with healthcare subsidies being. Realistically, I think in the next 15 days, the market has to ask itself, do we think AI deserves a continued premium? Which, again, Nvidia is still up 30% year to date. Google's still up 60% year to date. It's not like these stocks have collapsed. It's just they're not trading at those levels that they were trading at even a week ago, as we thought a lot of them would towards the end of the year. Nvidia being below 190 is kind of crazy to me. Google at 308, not that crazy. Amazon at 226, kind of crazy. So next 2 weeks are going to really define how this ends up playing out. Thoughts on BMNR? Unfortunately, ETH got hit pretty bad with the Oracle headline. And Bitcoin getting a little green candle right there, 88.2 to 88. Oh, we hit 87.6. Wow. I don't even see that. Yeah, around 6:30, we hit 87.6, now up to 88.5. Yeah, ETH getting hit over the weekend with Bitcoin. I mean, every Sunday, it's felt like Bitcoin and Ethereum, something happened. Someone got liquidated, some glitch happened, but and I know Sundays are always volatile for crypto because it's potentially low volume that affects it, but the past couple Sundays have been pretty nice. I mean, last Sunday we went from 94 to 89, which is very annoying, but here we are at 88.5. And we're going to see where that plays out going to the end of the year. Japanese bonds are down a little bit. Okay. 1.945 on the 10-year. The 10-year bond has not been the biggest issue. I know the Japanese are going to be cutting rates pretty soon, raising rates pretty soon. I think that's kind of baked in. So that decision we'll get this Friday. But the Japanese 10-year was not the problem last week. The 10-year in the United States wasn't the problem. I think the problem was just the fear of the AI trade. And now we're going to have to see going into next week if the market continues to be afraid of that trade. All right, here we go. Sunday, December 14th, 8 p.m. Thank you, everybody, for being here. The overnight markets are now indeed open. And let's see how we open up. S&P 500 up 0.16% at 682. Oklo, that's up 0.5%. Broadcom continues down. Wow. Street is not happy with Broadcom. We'll talk more about that. 359, that's still red. AMD is down about 0.32%. Nvidia is up a little bit, 0.39%. Rivian, which had a massive day on Friday, up 12%. That's up 1.63%. IREN, that's down 1%. Google, that's down 0.16%. Amcor, that's down 1%. Tesla is up a little bit. Tesla's actually up 0.43%. Rocket Lab, that's flat, 0.02. Oh, by the way, SpaceX officially IPOing. We'll talk a lot about that in a second, but SpaceX will be going IPO. Robinhood, that's down about 30 cents. Palantir, that's down 81 cents, 182.76. Roblox is up a little bit. You have Ondas, that's down 0.5%. VG, which doesn't trade after hours, it doesn't trade overnight, but it did trade after hours. That's up a little bit. Netflix, that's flat. SoFi, that's down 0.5%. Interesting. S&P futures are up and the S&P is up, but a lot of stocks in the S&P are down. which is pretty ugly. Amazon right there, 226.30. That's 0.05%. Broadcom, that's down 0.44%. AMD down 0.35%. BM&R, is that one dumping? BM&R is indeed dumping. That's down 0.5%. S&P, that's up a little bit. Amazon up a little bit. Apple, we closed, I think, green on Friday. Yeah, Apple was one of the only stocks that was green in the Max 7, 278. That's down another 0.25%. What's green then? Why is the S&P green? Everything else seems red. Lilly, is Lilly up? Okay, Lilly is your answer. JP Morgan, is JP Morgan up? JP Morgan is your answer. Goldman Sachs is up. The banks, the financials, and the healthcare names are green. Is UNH green? Everything else is red, and that's propping up the S&P. Yep, even UNH is green. All right, so tech goes red again, as we saw pretty much on Friday. However, S&P is holding green, as I guess even in the overnight markets, the rotation to financials and healthcare, at least those are the two, is Walmart. Dude, Walmart had one of its best weeks ever last week, and I don't even think I talked about it. Completely missed my radar. Walmart's flat after hours, but Walmart was up 1% on Friday when the entire market was down. Nvidia is green a little bit, 50 cents. I don't know if it's enough green to prop up the entire S&P, but that is correct. Nvidia is green, and then Tesla's actually decently green. Tesla's up Tesla's up 3%. No, Tesla's green. Yeah, there you go, 462 on Tessie. Okay, so Tesla and Amazon and Nvidia. Amazon and Nvidia are slightly green. Tesla's really green. Everything else, Amazon just went red. No, Amazon's slightly green. It went down 1.6, now it's up 0.7. Did the S&P just go red? Yeah, the S&P just went red. 682.78. Am I bugging, or is that, hold on. Let me check on Robinhood. S&P went 682.86. No, that's up a little bit. Weeble's saying it wrong, but that's up a little bit. Okay, so let's get into all the stuff we have to talk about. But yeah, S&P is up slightly right here. Amazon's up slightly. Nvidia's up slightly. And then Lilly and the financials are the ones that are really... Yeah, Weeble's glitching, right? Weeble's glitching a little bit. Some of these stocks are okay on Weeble. The other ones are wrong. Like, it just said Nvidia was red, then Nvidia went green. Then it said Tesla was up 3%. Now Tesla's up 0.5%. Yeah, it's a little bit of a Weeble glitch. Where's Weeble stock, by the way? That stock was at $10 last week. That stock $9.18. That's up a little bit after hours. Okay, so that's what we got. A lot of stuff relatively flat. Wow, iRobot enters Chapter 11. Lender to acquire Roomba maker. This stock was pumping throughout the entirety of the week. IRBT, it's up a little bit after hours. Okay, well, I think people expected this one to end up getting hit, and now it is. I mean, this thing was at like 50 cents, so if you wrote it up to like $5 or $4.50 or whatever, then that's been okay. Yeah, let me open up Legend, dude. Weeble's been just weird, completely weird. Let's pull up a couple of these stocks on Legend. But see, on Legend, it doesn't really give you... See, Legend's not necessarily giving you the after hours moving either. But at least we're seeing S&P right there, 682.55. You can see that, right? Yeah, you can see that. 682.55. Okay, so basically flat. S&P 682.59. Palantir's flat. Nvidia's up a little bit, 175.40. Robinhood 118. Robinhood is indeed down. That one's red. Tesla, Nvidia, and Apple are your Max 7s that are green. Tesla's up about 59 cents. And then Nvidia is up about 40 cents. And that's what you got there. Is rumor going to be an excuse tomorrow for the sell-off? Potentially. I think people knew Chapter 11 was coming for them, but their stock just ended up continuing to run. So, I mean, people have taken that thing again from like $1 to $4. So I'm not sure how the market's going to treat it tomorrow. Yeah, I mean, look at this thing, dude. This thing was at $1.77. Now it's at $4.32. It's up 120% in the past month. So, not sure how this one trades, but I do know people... A lot of volume's been coming in on this one. Got to 524 on December 10th. Now back down to 432, up from about $1.11. Rocket Lab is flat, but Rocket Lab was up 30% last week, so people can't be too mad about that. Rocket Lab, nope, Rocket Lab's green, 62. up about 1%, 40 cents for Rocket Lab. All right, so let's get into all the details that we've got going on for tomorrow and kind of give a preview of what's going to happen throughout this entire week. Again, market's relatively flat. You have a couple of individual names that are green, everything else continuing some of the red, not aggressive red. Like Robinhood's down 50 cents, Palantir's down 36 cents. A lot of these high beta names are down 1% or 2%, but nothing massive across the board. Seagate Technology Holdings to be added to the NASDAQ 100, Western Digital to be added to the NASDAQ 100, STX and WDC. Okay, let's see if that's having any impact on those stocks if they trade overnight. STX, that's up about 1%. Western Digital, which has been a phenomenal stock this year in terms of return, that one's up about 0.37%. Okay, makes sense that they're transitioning to the NASDAQ 100 as well. All right, so let's get into it, and let's talk about some of the stuff we have for this week. So again, last week was the biggest headline that we had on Friday was the Oracle's news in regards to the data center stuff. Got another update today, which continues to go in track with what we are hearing from Oracle, which is that Oracle is now adding $150 billion in new data center lease commitments in Q2. The total lease commitments have reached $248 billion as of November 30th, so pretty much towards the end of, or to the middle of Q4. Lease deals are primarily tied to cloud and data center expansion, which is what they said on the call. It's supporting partnerships with clients like OpenAI. Customer contract commitments hit $523 billion. That's your RPO number. Oracle expects 10% of contracts recognized in the next 12 months and another 65% of revenue to be recognized over the next 5 years. So a lot of this stuff is relatively bullish around the data center leases that Oracle has been going after. And none of this stuff is necessarily inconsistent with what we heard on earnings. What it is inconsistent with is the delays that were the headline that captivated the entire markets on Friday. And unfortunately, that stuff took the market down. But again, it just doesn't seem as real as how the market kind of priced in, especially when you're talking about $150 billion of leases in the Oracle data center ecosystem. Again, Oracle said site selection and delivery timelines for OpenAI data centers were set jointly with OpenAI. No delays to any sites, and all milestones are still on track. Market recovered a little bit, then kind of gave back a lot of those gains. So we're not really seeing any recovery in the overnight markets. Tomorrow, I guess when we get more volume, we'll see if there is any recovery. But that news from OpenAI is not necessarily bearish. IPOs, SpaceX. So SpaceX has started the process of fielding Wall Street banks for a potential IPO. This is reported by the Wall Street Journal. Today, on top of that, SpaceX yesterday completed its tender offer at a $800 billion valuation at a $421 share price, which is ironic at $421, but nonetheless, it is $421. The tender offer allowed employees to sell their shares, and SpaceX did not necessarily raise money from the transaction. So the question now becomes, when are they going public? How are they going to go public? At what valuation are they going to go public? They're completing a tender offer at $800 billion, but is it actually going to be $800 billion? Or is it going to be more than $800 billion? And does this thing double in a day as soon as it goes public? I'm a bit skeptical on the SpaceX IPO, and $800 billion, I'm sorry, I'm just not buying it. I think it's a lot of hype baked into them going public based on their financials. Now, is there a story that's probably better than most stocks in the market? Yes. Will the IPO do well? Yes. But I feel like if you can't get in early on this, the best way to play this is Rocket Lab. Like, is Rocket Lab a bit expensive at a $32 billion market cap? Sure. But I'd rather pay that than $800 billion on SpaceX, which you're probably not going to get it at $800 billion unless you have a connection. You're probably going to have to get it at $850 or $900 billion in the public markets when it opens up. Or even if you go through an SPV, they're probably going to charge you a premium. They're not going to give you a juicy $800 billion valuation because that's where the employees got to exit. So they're going to charge a fee on top of the employees, and you're going to probably have to pay $850 to $900 billion just to get access to it. So, I mean, if you're trying to get access to SpaceX in the private markets just to dump it when it goes public, I don't know if that's the best risk to reward. I mean, it's not like you're getting a 10x that you can dump. The 10x was years ago, not today. So, look, I don't love Rocket Lab's valuation. I've been saying this since 75. I've been long Rocket Lab since 25. I think it's a phenomenal company. But if I had to play space and I wanted to get access to that ecosystem, it'd be Rocket Lab or ASTS. It would not be like salivating for a SpaceX IPO that a lot of people are going to get into. I just don't know if the valuation there makes any sense at all. Now, they're going to raise a ton of money, and that money is, going to be instrumental for them. And they're going to really have to pump this data center and space argument, because Starlink is amazing, but Starlink is not enough for it to, be justified at the valuation that it's justified. Again, $14 billion this company does in revenue. So as much as I love Elon and SpaceX, I don't think I'm going to be a buyer of that. And even if I wanted to be a buyer, there's no way retail. I mean, the amount of people that are going to be trying to get access to it on Robinhood, like it's going to be, I think, quite impossible to get a meaningful level of exposure to it without having to pay a hefty premium. So yeah, we're going to see how this plays out. Now, the other thing about SpaceX that's also interesting is that if they do IPO and go public, the question is, how much can the valuation be supported? Because, I mean, we've seen this with Tesla before, right? Tesla pumps up and then Tesla gets dumped. I mean, there's a lot of retail that's going to be interested. I don't know how many people are going to necessarily have diamond hands. You're going to have a lot of institutions that are going to be wanting to dump on those people that supposedly have diamond hands. So it's one of those things where it's like, same thing with the Databricks IPO. A lot of these companies that go public, they are obviously looking for exit liquidity. SpaceX has been the most coveted startup in a very long time. And I just don't know if I want to be part of the retail investor community that is exit liquidity. But I mean, if this thing pumps double in a day and goes to 1.5 trillion immediately, then we've got a pretty liquid market. And with rates coming down, more money entering into the ecosystem, not crazy to imagine that also could end up playing out. Speaking of Elon, Tesla. So the big news over the weekend for Tesla, which quite frankly happened this morning, shout out to our boy, Mr. Sawyer Merritt, who posted this. Rocket Lab is well up about 2% in the pre-markets, probably on this SpaceX news. There you go. There's a Tesla Model Y robotaxi. No one is in the car in Austin, Texas. And this has been confirmed by multiple Tesla employees that officially this has gone live in the state of Texas and the city of Austin. And then they found a second one as well. So there's the second one right there. This is a different car from the one spotted earlier. They have different license plates, and no one is in the front seats. Rocket Lab, 4%. I really do think Rocket Lab is the way that people are going to play the SpaceX IPO. And that doesn't mean Rocket Lab is the cheapest stock in the market. It just means that thematically, this is going to get some love. But the reason Tesla is up right now is because I think the market's pretty excited that, wait a second, this robotaxi stuff that Elon's been talking about, FSD 14.2, which in my anecdotal experience has been phenomenal, is starting to now get on the roads without needing supervision. I mean, even in my experience with it, I'm able to be on my phone. It doesn't nag me as much. Like, you can just tell it's getting friendlier towards not necessarily always having your attention looking at the road. You can look out the window for a little bit and enjoy the view without it constantly saying, hey, pay attention to the road. So we're getting to the point where the car should be able to drive itself. We know Waymo has completed 14 million rides this year, and we had some really big Waymo announcements last week, which is why Uber ended up taking a 5% hit for the week. Uber right there at 85. That one's down again in the overnight markets. But if Tesla could finally get to the point where they can pick people up and put them in their destination without needing a driver in the car, I mean, the manifestation of what everyone's been waiting for might start to take place. So I think that's why Tesla's up, and I think that's why the market is relatively excited for this as well. I saw a Waymo car being tested in London. Yeah, so Google did say that London and Tokyo are the next two major cities. They're expanding to 20 cities. Rocket Lab did have a successful launch in Japan. That is correct. That happened yesterday, right? I think that was yesterday. So either that was yesterday or Friday night. No, I think it was yesterday during the day. But that's another reason why Rocket Lab's up. But Google wants 20 cities and 1 million paid rides by the end of 2026 per week, which would be 52 million rides, which would be essentially a tripling of paid rides from last year, or from 2025. So Tesla's nowhere near that scale yet because they don't have the amount of vehicles needed to be getting to that scale on the roads. But eventually, if they get there, that would be very exciting for Tesla. And so that's why Tesla's giving a move. And that AI regulatory framework that Trump signed from a executive order perspective about how there should be one ecosystem for AI, even though different states can have different bylaws, it all has to live up to one federal standard. That's super bullish for FSD and unsupervised driving, so that Tesla doesn't have to go to every single state and get approval. And I'm sure there's still going to be the minutia of how they get it approved everywhere. But if you have something like that, I kind of think that's why Tesla pumped on Friday. That would be like very beneficial to Tesla in particular, because they have laws that need to be governed in FSD universally. So it seems like that would be a good deal. Josh, thank you for the $50 super chat. No lies detected on Rocket Lab. Yeah, Josh had a great Substack on Rocket Lab that I read over the weekend as well. I think the Rocket Lab thesis is very, very sound. I don't think that Rocket Lab thesis is going anywhere. It's just expensive, in my opinion. You're paying 40 times sales for this company. It's a bit expensive. Now, they are close to profitability, but expensive gets thrown out the window if there's a narrative and one, I mean, like essentially this happened with Palantir, right? Palantir has always been expensive, but the narrative that software and AI were going to converge, Palantir ended up being the only company that was growing, profitable, and investors could play, retail or institutional, as a thematic for software and AI. So Palantir ended up getting the bid. And I think that could easily happen to Rocket Lab if this space thing becomes even bigger than what we imagined because of that SpaceX IPO. And that might be an easier way to play the entire the space trend. So that's what we have on Rocket Lab and Tesla and the SpaceX IPO. And hopefully that ends up happening as we get earlier into 2026. Some headlines from the Trump administration. So we have a couple clips right here. Trump was speaking at a Christmas reception. Here's a couple of things that he said about the state of the economy, and then we'll talk about what he's thinking about for the Fed going into next year.
He has never seen. And I just look so forward to the results. You're going to see results in 6 months to a year. I think you'll see results. We've never had anything like it. Again, there's never been any country. China, wonderful. I have a great relationship with President Xi. China's never seen it. Nobody's ever seen it. And by the way, we're leading in AI by a lot. AI is a big deal. And we're leading in AI by a lot. And the big problem was electricity. But I allow our plants, in other words, all of these geniuses that are building a $60 billion plant, I allow them to build their own electric capacity as part of the plant. And that solved the problem with the old grid. He has never seen. And I just look.
Okay, so that was Trump on some of the stuff with the grid. And then this is what he said about inflation.
The worst inflation in the history of our country. Prices were the highest they ever were. And what we're doing is bringing them down. We now have inflation is totally neutralized. We may get it a little bit lower. You don't want to get it you don't want deflation. Deflation is in many ways worse than inflation. But we have a record setting. We have more people on Friday. We had more people working on Friday than at any time in the history of our country. Think of that country. The worst inflation.
So we've been talking a lot about this affordability narrative and what that affordability narrative is going to do towards the midterms. This is the Secretary of Energy this morning discussing what's going on with energy bills. Again, data centers are ramping up those energy bills dramatically. We've seen evidence of that in Dallas and Oregon. Here's what he had to say. Again, I think it's going to be one of the prevailing narratives going into the midterms around affordability. Oh, 1 second. Let me reload it. Okay.
With the president talking about affordability, and part of the refrain was that Biden's, quote, 4-year all-out war on energy was a major driver of inflation. And the administration's been pointing out that blue states' energy costs have been skewing the national average. But it's not like the costs for electricity are down in red states either. The president's coming up on a year in office. When can Americans expect to see their energy bills drop?
First of all, you should start with gasoline prices. On inflation-adjusted measures, gasoline prices are the lowest they've been in 20 years, except during a blip during COVID. So I think President Trump's policies of pro-energy, energy addition versus energy subtraction of the Biden administration have been immediately effective in gasoline, in diesel, in other fuels. But the electricity sector is a big, complicated machine that for 4 years, the Biden administration shut down coal plants, shut down natural gas plants. Heck, I was just out in Washington State. They were going to dismantle 4 hydroelectric dams. So we've stopped digging the hole We've stopped the closure of coal plants. You'll hear more on that later this week. And so we're doing everything we can to stop that rise in electricity prices that was driven by Biden policies. And yes, there's inertia that continues on. But very soon, you'll see a stop of the rise of electricity prices. And with the continuation of Trump policies of energy addition, you will see declines in electricity prices later this term.
And very quickly, because we're
So again, you got the Secretary of Energy saying, well, you know, if you're going to talk about energy, you're going to talk about prices going higher based on AI and data centers. We have to talk about gas prices, and we have to talk about all the progress that we've made. Yes, that's true. I don't know how much the market is going to care about it, or at least not the market necessarily, but the American people going into the end of the year, unless they see a meaningful difference in prices. And I think, you know, Trump knows this, the administration knows this. I think this is why they're going to be very peculiar on making sure that prices do start coming down. And we've already seen this as they've started to roll back tariffs on things like coffee and bananas. The sort of key point right here that's also really important is, and I was talking about this with Steve on Friday, which is if we were to get a massive 20% decline next year, which could happen. Tom Lee does have his thesis that we're going to go down 20% and then get back up to 7,700 in 2026. The worst thing that could happen is that 20% drawdown, not for the stock market, but for the economy. Because one of the reasons the economy is somewhat elevated is because people that have assets feel like they're richer because their assets are up, and as a result, they're spending. So, you know, even if you have the bottom end of the consumer that's not doing the best, you might have some people that say, hey, I'm ready to vote for this administration because my asset prices are doing okay. If asset prices go down, that could be a reason they don't vote for the administration. But number two, it could more explicitly show the exploitation of the low-end consumer because the high-end consumer doesn't subsidize the economy because their portfolios are down probably a lot more than 20%. If the S&P actually falls 20%, most people will probably be down 30 to 40%. So you kind of can't have that happen if you want the affordability narrative to be strong, which is, I guess you could call it a Trump put on the market. Will it be effective? I don't know. But if asset prices get hit, affordability is not necessarily going to be the best either. Here was Kevin Hassett as well on the same concept of affordability.
So people are holiday shopping. They're aware of prices. The president said this week, prices are coming down tremendously. The latest data, though, from the Consumer Price Index, up 3% year over year. Personal Consumption Index is up 2.8% year over year. What data is he looking at? What's your benchmark?
Right. Well, one of the things that if you saw his presentation in Pennsylvania, is he put up a bunch of charts, which he loves to do, where he went through the individual items that have we've already sort of made a bunch of progress on. And so, for example, under Joe Biden, prescription drugs were up 9%. So far this year, they're down 0.6%. Gasoline is way down. It was like the highest ever under Biden.
Eggs,
and so,
talking about eggs.
yeah, he was talking about eggs. And so I think the way to think about inflation, of course, is that there are like micro effects, like the time that we had the avian flu affecting drug prices, and then macro effects, which is runaway spending, big deficits, and then an accommodative Fed policy. And I think
now
that
tariffs adding to some price increases according to the Fed chair.
Well, I think that the tariff evidence is mixed, but the point.
Once again, making the argument that there are multiple different perspectives on how to analyze affordability, and a lot of it comes down to how do you think of asset prices versus how do you think of the president's first 9 months in office. Different questions bring up different answers, but this administration is going with the route that the economy is growing, we're going to get rates down, and as a result, GDP growth being up should be enough to help the average American. Here's what Kevin Hassett had to say about the deficit as well.
We've got deficit going way down. So right now it's looking like the deficit for this year will be $600 billion lower than it was last year. That really helps lower inflation. We've got the trade deficit cut in half from last year. And so all of these things are things that should continue to move us towards the Fed target of 2%.
Now, again, a lot of that is going to be contingent on if we can do two things. Well, three things. Number one, get rates down. Number two, Tesla right there, 463 almost in the overnight markets. Number two, continue to grow GDP, which is incredibly important. And then number three, collect tariff revenue and pay off our debt. I mean, if you could meaningfully collect tariff revenue without affecting GDP growth, because tariffs hopefully don't have an impact on overall demand, which is kind of what Jay Powell was saying on Wednesday. And we can lower rates at the same time. That is your bull case argument for 2026. It's really not that complicated. Rates come down, GDP goes up, tariff revenue helps pay down the debt, and tariffs don't have a massive impact on demand. Is that how this? And then obviously the AI trade needs to continue to be as strong as it is, with earnings growing at the rate they're growing at. If that's the case, you got a lot of Wall Street analysts saying 7,500 to 8,000 on the S&P is not crazy, which would be a relatively strong bull market. It would be 11%, which is not horrible, even if it's not like the 20% we've had over the past couple of years. But I think there is some fear on, like, do we even get that? And I think that's what the market is starting to get a bit more concerned about with every random headline that comes out about, well, this data center is not going according to plan. All right, dump the market. Like, it really is crazy because I don't think that level of volatility is going anywhere. I think 2026, everyone has to be prepared for, if you're in certain high beta names like a CoreWeave and a data center headline comes out, we're going to have some issues. Immediately, we're gonna have some issues. And it's just like, even though that data center headline probably doesn't have a meaningful impact on CoreWeave, but nonetheless, that's the issue that we have to deal with. And yes, as people are saying in the comments, Supreme Court decision on tariffs, that should be coming out towards the end of the year. If it doesn't, early January. Trump already tweeted a lot over the weekend, or not over the weekend, on Thursday, Friday, about how the Supreme Court decision is not going to have that much of an impact because they're going to find a way to implement tariffs in a different way. I don't know. I don't know if they're going to be able to do that, but I mean, that's going to be something where the market's going to have to ask some questions. Again, the bull case here is the market doesn't like the tariffs in the first place, so good that we get rid of them. Bear case is we lose a lot of negotiating power with countries that we had all these trade deals on with tariffs, which, by the way, we still have not signed like an official trade deal with a bunch of countries, including India. That was supposed to be a big one. That one didn't happen yet. China, we've signed a couple of things, and we've started the export of rare earth minerals again with them. But there's a few big countries that we still need to get those in place, and hopefully that happens by the end of the year. Here's another update on the 2026 S&P 500 targets from the Compound this weekend.
Come on, dude.
They're at 63.78. Isn't the S&P higher? Come on.
So let's set this up. This is Wall Street Strategist 2026 S&P 500 targets. The average target for next year, 7,512, which implies from yesterday's close about a 10% return. What? It's like magic. About a 10% return for the S&P,
give or take.
which relative to recent years is actually on the bullish side. Because 2 years ago, I think the call for 2023 was flat.
Yeah.
And of course, we went up 30%. So I don't know. I find it's interesting to just see where people's heads are at.
Can you just pause for a second? It's insane that like we have this thing in America that by and large, like that's like 10% year after year after year. It's just like free money. No, I'm not going to jinx
I
the
have
top.
been saying
I just think
this.
that the returns of the market in America have really been extraordinary.
Did you see the bank on that chart that's like bang on 10%?
Oh, there was
It's
one?
UBS.
Yeah. Amazing.
Of course it was. It's a shortcut.
Yeah.
Can I tell you that 10 years in podcasting, you're kind of like The Simpsons. Like this.
We're
like
still funny though, right?
No.
So 10% up from the Wall Street banks is their target for the S&P, which would put you roundabout at that 7,600 level. I mean, what are we thinking? If you had to pick, if you were a Wall Street analyst and in the chat, you had to put out a target on the S&P, put your target in the chat. I feel like the easy argument is 10%. That's like a sort of non-contrarian view right here. Obviously, if you're a bit more bearish, and again, like I think there's reasons to be bearish. I would just be curious if someone's saying like 5,500, 6,000, I'd be like, well, why? Because we know earnings are going to grow. I mean, I think we're going to escape a recession. Yes, rates are going to come down. That doesn't mean like Bitcoin has to go to $1 million, but that also means that, I mean, Bitcoin's going to be a bit more attractive than other assets if rates come down. So, you know, maybe the entire market doesn't have to have some 2022 type of scenario. So if the target is significantly lower, I would be curious why. But also, I don't think the target can be that much higher because AI trade is definitely getting a bit exhausted. And the market's going to have to try to consolidate how it plays out. Wow, I'm seeing a lot of 76 and 77s. I see a very few 8,000s. Someone says 10,000 because who cares? you imagine 10,000 next year? That'd be absolutely crazy. Yeah, most of you guys are within that 75 to 7,700 range. So we're all taking the 10% consensus view. Last year, I think the average was 67 from Wall Street. And it looks like hopefully we end at around at least 6,800. So not like it was necessarily that different. But if we do get 75, that would be the fourth year of the bull market, which does not include a back-to-back year of 20%, which is reasonable. Granted, if everyone's not expecting 20%, maybe that helps us get to 20% just based on more and more people saying, hey, we need to allocate our money somewhere. But then you get headlines like this that really start to make you wonder what the hell's going on in the market. So the Wall Street Journal did an expose on OpenAI over the weekend. Apparently, the company is getting rid of their vesting period and the cliff for talent inside of the company. So you don't have to stay 6 months just to get your stock vested. The idea is this is actually going to retain talent versus allow talent to leave. So they're kind of going a little bit more of a counterintuitive way on controlling and keeping their talent as the intense talent war heats up in the foundation model companies. But the Wall Street Journal also reported that the company expects to spend $6 billion in 2025 on stock-based compensation, which is almost half its projected revenue. Now, Sam Altman says their revenue is $20 billion, not $12 billion. Okay, so then it's about a third of their revenue on stock-based comp, which I get it. You got to pay the AI researchers money. Like, you got to give them an incentive to stay at the company, or else Zuck's is going to take them or Google's going to take them. But my goodness, that's aggressive. Almost a third of your revenue in stock-based comp. This is not a company that's generating any positive free cash flow like the tech companies are able to do. So it really then, gets people worried about, does Sam Altman have the money? Can he get to 1.4 trillion in spending commitments? And if he can't, what companies are going to be collateral damage? Is it going to be OpenAI? Is it going to be Oracle? Is it going to be AMD, Oracle, Nvidia, which a lot of these companies already have started to distance themselves a little bit from OpenAI. Disney leaned into it, though, this week with their partnership. But it just makes you question things. And so, again, I don't think the death of OpenAI is happening. I was actually at a family event today, and I was speaking to one of my uncles. He's a bit older. He's I think he's like 84, and he was just telling me how much he's in love with ChatGPT. He's like, this thing just gives you every single answer, and it's like, I'm just on this all day asking questions. I was like, how do you like it compared to Google? He's like, Google. I don't use Google anymore. I use ChatGPT. Now, he doesn't know about Gemini. He doesn't know about Anthropic. He doesn't know about it, but he knows about ChatGPT because it's gone that mainstream, which is, once again, when you hear that type of stuff, you recognize how magical the feeling is when someone interacts with an LLM. A lot of us, because we're in the tech ecosystem in the business world, we've used so many of them that, we've kind of been a little desensitized to it. But the average person, AI equals GPT. And, that stranglehold that GPT has over, at this point, 900 million weekly active users is enough to keep growing. Is it just enough to spend $1 trillion on CapEx that they don't have yet? I think that is the broader question, which is what we're gonna have to see. He doesn't pay for it. I asked him, does he pay for it? And he says no. He said I asked ChatGPT, what do I get if I pay $20 a month? And she gave me a good answer, but I don't use it enough to justify paying for it, which is fair. He uses it every day. But it's not like he's asking some very complicated question or sending a bunch of PDFs where the ChatGPT needs to read the attachment. And if you don't have the paid version, it's not going to be able to do that. Like, he's just asking it basic stuff all day. It's giving an answer. He loves using it, but not enough to pay for it. So it's one of those things where obviously AI is not going anywhere. It's just the market starting to wonder, can GPT pay for all this stuff, or OpenAI? And I think that'll be the broader question going into as well of 2026. ETH right here getting a little bit of a green candle. Very small one right here. Ethereum is, 303 to 309. You're getting everything going green, guys, after hours. Nvidia going green, or in the overnight markets, Webull green, Tesla's green. As soon as the market opened, there was like 3 or 4 stocks that were green, like some of your big tech stocks, and they were slightly green. Goldman and Lilly are continuing to pump. Look at Lilly up 1.4. S&P is now getting an actual move, 0.21%. Amazon's up. Oklow's up. Broadcom's still down, although it's not down as much as it was before. It was at 355. Now it's at 358. I thought about Broadcom over the weekend. The only thing I can realistically say for why this thing dumped is I looked deeper into the multiples. This thing is an expensive stock. When Chris was on the show on the day of earnings and we were like looking at the multiples, Chris was 1,000% right when he was comparing it to Nvidia. And like you can hate Nvidia or whatever, but my goodness, they're growing way faster than Broadcom and they're trading significantly cheaper than Broadcom. Broadcom makes Nvidia look like a screaming buy, or Nvidia makes Broadcom look like a screaming sell. So forget the long-term fundamental thesis of Broadcom. Like I'm not even talking about that. Just the multiple on this bad boy at 420 was aggressive, like very aggressive. And so the fact that it fell almost seems like inevitable now. Like they could have said anything on that call. It was just way too, just like Palantir when it got to 222 in the overnight markets or in the after hour markets, just like when Broadcom got to 420. It's like, yeah, that was amazing seeing it. But at 222, they had one of the best quarters in history, but still like the multiple just got up there. And so it ended up taking a hit. And the hit to 180 sucks for a lot of people, but 180 is still a relatively strong price for Palantir. 360 is still a pretty strong price for Broadcom. So I think with this one, consolidating the gains is not going to be horrible. I don't know if this easily rebounds back up 11% that it lost. But it showed me that Nvidia continues to be disrespected. In fact, here's a comparison between these two. By the way, we were talking about energy and data centers. Elon tweeted this today as well. The sun is an enormous free fusion reactor in the sky. It is super dumb to make tiny fusion reactors on Earth. Even if you burned 4 Jupiters, the sun would still round up to about 100% of all the power that would ever be produced in the solar system. Stop wasting money on puny little reactors unless actively acknowledging that they are just there for your pet science project. So you got Elon with a pretty big endorsement of solar and meaningfully using the sun and kind of saying building these reactors is kind of stupid. But I think he also understands how much energy we need for this AI build-out, and that's why he's saying we need to be more excited for the sun. So take a look at this. Broadcom trades at 35 times next 12 months PE with a huge moat and estimates about 50% EPS growth next year. Nvidia trades at 25 times, 10 times lower than Broadcom, with an even bigger moat. I think we would say Nvidia's moat is objectively bigger than Broadcom's moat, and estimates of 57% EPS growth next year. I mean, it doesn't mean Nvidia needs to be $250, but my goodness, Broadcom trading at this multiple with Nvidia now trading at 175 is just kind of dumb. And maybe the market recognizes that going into next week, but maybe they don't. So we're going to see. But yeah, I don't expect Broadcom to have that big of a recovery. I think we can see back up to 380 this week if we kind of like get a little move on the S&P. Back up to 400 might be a little tougher. Nvidia, though, up 0.76%, 176 in the overnight markets. The reason it says fiscal year 2027 is because, remember, Nvidia has like a weird calendar cycle. So technically that's next year's fiscal year, although that, I don't know why Snowflake does this. I hate when companies do it, but it means next year, even though they're saying it's 2027. So yeah, I think Broadcom's fine, but I do think Nvidia right here is cheaper. And then again, Broadcom has a massive moat when it comes to ASICs, and they're doing a lot of different work with those companies they're working with. They got, I think, another $11 billion contract with Anthropic for TPUs. But again, the multiple compared to the growth, it's not really adding up here. And so it seemed kind of inevitable this stock was going to take a little bit of a tumble if everything didn't go perfect. And then they said a couple things that weren't perfect, and then stock took a bit of a tumble. Tesla right there, 462, still moving after hours. Bitcoin as well. You're getting a little bit of a pump back to 89. Yeah, that's actually a little bit of a $1,500 candle right there. 88.2 to 89. Webull right there, 916. Tesla's up a bit. Goldman Sachs up. JP Morgan up. Apple, that's up. Bitmine's still down, but it's up from where it was. Amazon's up, and then the S&P continues to move up. Oracle as well, like Broadcom, not getting a move after hours, as that one continues to go red. I think Oracle consolidating here and Broadcom consolidating here is bullish, just because they all trade at high multiples. Oracle not as high as Broadcom, but Oracle has a lot of debt, and so that's where you got to discount it. But I don't think they should be lower than these. I mean, Oracle should not go to like 170. Broadcom should not go to the low 300s. That would be a bit aggressive. Even Robin at 120 after hours, that one getting a bit of a pump as well, which is nice to see. Palantir right there, 183.18. That's down about 0.21%. Okay, cool. So that's what we had with Broadcom and Oracle. We talked about the SpaceX IPO. Let's talk about some macro charts. So a couple different things we have on macro. So first of all, this is something you're going to see a lot of in 2026. It is something the administration is going to have to figure out because right now we don't have, well, I guess a meaningful solution to this. Student loan balances, 90 days delinquent, have jumped up to about 10% in 2025 Q1 versus just 0.5% a year ago, roughly back to pre-pandemic levels after the Biden payment pause ended. So obviously this was inevitably going to happen simply because of the fact that we had a massive pause over the past 5 years and now student loans are coming back. However, this is another form of deflation because if people have to make that $400 or $500 payment every single month to their student loans, they're not going to be able to put that money into the economy. And the fact that we're seeing those loans go delinquent means that people don't even have enough money to make those payments. So, you know, when Trump talks about affordability, the student loans, credit card loans, auto loans, these are the things that pop up. And without a meaningful way to, you know, respond to that crisis, essentially, and if this number gets worse, then, you know, it's going to become a bigger crisis. We're going to have a broader issue. Obviously, the sort of underwriting of degrees has been discussed many, many times. A lot of people have said the federal government should not be giving out loans to degrees that aren't going to actually make money. The problem here is that I think a lot of people are questioning what degrees actually make money, right? Like in the world of AI, a computer science degree theoretically should be able to make more money than like a gender study degree. But I think there's some question about like, hey, is a computer science degree still going to be super, super valuable in 5 years, which I think objectively it will be. But if we were to overhaul the entire federal underwriting process for student loans, that would be the first step in changing, you know, the process of these loans going delinquent. But that's something that I don't know if any administration is willing to do, because that means basically rejecting people from going to college unless they study XYZ. And the colleges don't love that because they make a lot of money from people studying a lot of stuff that doesn't matter. I know this for a fact because I went to business school and didn't learn anything about business, but like Rutgers got a lot of money out of me for honestly doing nothing. Like, so, I mean, the colleges have a very perverse incentive right here, especially the state colleges, because they get a lot of federal grants and subsidies for this stuff. But if we don't make a change there, then I think these loans are going to continue to be delinquent, which is going to be, you know, not the best thing in the world to necessarily see. Having said that, that was the update on the macro in terms of loans. In terms of retail investors, so take a look at this chart. I thought this was pretty incredible as well. So this is a chart about retail investors in the blue versus long-only hedge funds in the red. Retail investors accounted for 20% of U.S. stock market trading volume in Q3, second highest on record. This is only below the Q1 2021 peak during the meme stock frenzy. By comparison, before 2020, this percentage averaged 15% for several years. It is now 5% above that. These funds are also now at half of their levels seen in 2015, making one of the most notable shifts in market structure in decades. To put this into perspective, the combined percentage of all funds, including long-only hedge funds and quants, was just 31% in Q3. Retail was 20%, which means if you take into account hundreds of billions of dollars of hedge funds, quant, and long-only, it was only 11% higher than retail, which once again goes to show that retail is a massive, massive force in the ecosystem of the stock market. It's just now going to be a question of how much does that force continue to play out going into the next year, hopefully this bull cycle, which is essentially the fourth year of this bull cycle. And like, I don't think realistically there's a world where retail is not going to be a big force. Like, here, could you imagine retail not playing it? The only way that happens is if we have a market meltdown, because then people get wiped out and they stop investing. But if things are even flat next year, forget bullish, I think retail continues to allocate capital and put money into the markets. Now, could we get rugged with a ugly, ugly decline? Yeah, that's possible. And that would definitely get, I mean, that happened in 2022. I think there's a lot of people that just didn't care about the market anymore once they saw their portfolio get hit. But I also think that would create such a massive opportunity that, like, I wonder on the 5% drawdown we got in November, right before Thanksgiving, the put call volume was at one of its highest levels ever, aka people just bought tons of calls because they're like, oh, stocks are cheap. Like, I wonder how low does the S&P have to go for people to be demoralized? Because one thing we've heard about the retail investors one thing we've seen over the past 3 years is that we are in a buy the dip generation. It's not easy to be demoralized when you think that every dip gets rewarded. And until we have a cataclysmic event where the dips, I mean, even if you bought the extreme fear November dip, you were rewarded. Not every stock has got back to all-time highs, but I mean, Rocket Lab was like at $38. It's at almost 65 right now. By the way, we're back at fear at 42. You got rewarded. You know, Robinhood was at 100, Palantir was at 147, Nvidia got below 170. So the point is, I think when we stop getting rewarded, that's when you stop getting people to buy, aka a prolonged downturn, which we haven't seen in about 3 years. I mean, again, the closest we got to it was Liberation Day, and that V-shaped very quickly. So I think you're going to need a very, differentiated string of events to come together to create that prolonged downturn to get people to think the dip isn't bought. And that also is going to be an ugly situation if it happens, because if you remember in 2022, there were many moments throughout the year where people, including myself, didn't really believe it was a bear market. You just kept buying the dip, and then there were certain spikes up where like, oh, we're in the clear, we're good, we're back to go, and then boom, we came right back down. And now in hindsight, it makes sense that was going to happen because Jay Powell was not going to stop raising rates. But now Jay Powell is cutting rates, which is why it would be very weird to get a prolonged downturn. If we do get a prolonged downturn into a rate cutting cycle with the overall AI trade, and everyone keeps thinking it's not prolonged, aka they keep buying the dip and stop getting rewarded, you would have to have 10 to 15% down, maybe 20% down before people are like, you know what, I'm done. I'm not touching. I mean, people bought the dip on Friday. I bought the dip on Friday. I didn't buy a crazy amount of the dip, but I bought a little bit. I bought Nvidia at 175, bought Hood at 119, bought Grab at 515. So like, until those don't get rewarded, I think you will have a buy the dip generation continue to buy, along with the institutions who might, continue to buy as well. And that's what creates that momentum. Tesla right there, 462. That's up 0.71% as well in the overnight markets. You assume everyone has liquidity to buy the dip. Well, look, I agree. I mean, liquidity to buy the dip is something that's also going to be necessary next year. And if we have a ugly labor market, which we're going to get jobs data on the 16th, so that's going to be very, very important to see. This is the first jobs data after the rate cut. That is also going to be a massive implication or a massive impact on if liquidity holds up. Santa Claus rally. Since 1929, here's a good chart that I saw this morning. The S&P 500 has risen in 79% of Santa Claus rallies, average return of 1.6%. It covers the last 5 trading days of December. So it starts December 26th and the first 2 trading days of January. The S&P 500 has also posted positive results in 79% of these periods since 1950. All while the last 2 weeks of December have been the best weeks for stocks over the past 75 years. We are officially in the last 2 weeks of December. So theoretically and historically, the next 2 weeks should be nice to us. The question is going to be how nice, if they are nice, or if we get a 2018 December where we think it's going to be nice and then it completely goes the opposite direction. The difference here, and I know people say the shutdown, the tariffs, very similar to 2018. The big difference is in 2018, Jay Powell was hiking. Everyone forgets that. I know there's a lot of comparisons to December 2018 that seem similar, but the one part that people leave out is that Jay Powell was hiking. Jay Powell is now cutting. He just cut on Wednesday. So I think you just have a fundamentally different rate cutting cycle going into 2026 that has already started as per last Wednesday. Is how December, end of 2025 could play out. Here is what Deutsche Bank said on their S&P 500 target. They are thinking 7,500 for 2026.
See this weakness that we saw, especially in the first half of this year. If you look, the dollar started to stabilize in the second half. Since this Mar-a-Lago Accord related, concerns that people had. I mean, there was a concern that the incoming administration really wanted a weak dollar just to make sure that the trade deficits gets rectified and our exports become more competitive. I think now the narrative has changed, especially with the Fed now saying that we're not going to be cutting as many cuts going into 2026 as what the street was initially expecting. So I think when you look at the strength of the economy, which tends to be a good precursor to the underlying currency strength, when you look at the fact that the equity markets are generating double-digit returns again this year, that should attract a lot of fund flows. When you look at all these things together, it's hard to make the narrative that the dollar is going to decline as much as we saw this year. And if you were to zoom out a bit, yes, dollar had a pretty weak 2025, but we're still up 7%, since 2021, and on an annualized basis around 2%. So I'm not too, our outlook is that against some emerging market currencies, you might see a little bit of a dollar weakness, but euro dollar at 115 and dollar yen at 145 is our 12-month outlook.
On a day where we're getting reports that there could be more seizures of more Venezuelan tankers, how does geopolitics factor into this market here? Or is it calming down looking to 2026?
Actually, obviously at any given time, geopolitics can flare up and play a role, especially when you're talking about oil, which is a political commodity. So you want to keep an eye on it, and it's one of our themes. But having said that, I think we are entering 2026 as probably a better, geopolitically than maybe 2025, where we had a new administration coming in and a lot of elections, from the rest of the world. That there was this Middle Eastern crisis, which seemed.
I would agree with that. I think geopolitically entering 2026 is not as dicey as 2025. Now, we don't have an update on, or a official update on Russia-Ukraine, although there has been a peace deal that has been sent out and Zelensky might be closer to signing it. But I mean, I definitely think going into 2025, there were more questions than answers around geopolitics. And then you had the Wall Street Journal on Friday also said the report from Trump that he's thinking of Warsh as the next Federal Reserve chair over Hassett. So Warsh right now in the prediction markets is leading over Hassett. And, Trump also says interest rates should be 1% or lower. I don't know if we're going to get 1% rates. If we do, this market is probably going higher than 7,500. But if he gets a Fed chair that's conducive with the idea of getting us to that level, that would also be pretty bullish. So I don't know, dude. I don't think that. So here's a question for everybody else. Here's a question. Let's frame it like this. Let's say we were going to get a massive pump into the end of the year, right? Let's say, I don't know. Let's pick a stock. Let's pick Nvidia. Let's just pick Nvidia for the hell of it. Nvidia 200 by end of year. Okay, which means if Nvidia is 200 by end of year, pretty much everything's going to be higher, right? Everything's going to get a big move. Do you sell in January? Not sell everything, but do you take some profits in January to hedge against the volatility? Because I think, and I saw a lot of comments in the chat right here that said, man, it would have been so nice if we had just sold at the top in October. Obviously, yes, it would have been nice because it's nice to sell the top. But if the market gives you an opportunity again, which Nvidia was basically 205 at the top in January or in October, and you get to that same range again, do you take some off the table this time? Do you take some off the table? Do you de-risk a little bit? And do you just have some of that money in cash, have some of that money on the sidelines, have some of that money, get ready to buy protection? Because I don't think that's the craziest idea. I wouldn't sell in December. Obviously, everyone has a different tax situation, but I personally do not want to get any more capital gains going into December. So even if we get a massive run towards the end of the year, I'm definitely not selling anything in 2025. But going into January, even if you get a little bit less of a better price than you would have got at the end of December, I don't think it's crazy to take a little bit off the table. And that taking a little bit off the table is just hedging against your volatility. Now, getting out of the markets, I think, is stupid because you're fighting the Fed at that point. And maybe the stock market ends up not being conducive with the Fed, which historically has not happened. When rates go up, markets go down. When rates go down, markets go up. So I don't think you get out the markets. But if you have an opportunity to get, Tesla at 500 or Hood at 140 or a lot of these prices that just get back to those October highs, I don't think people are going to hesitate to take some of that money off the table. The question is, do you even get that? And then the broader question is de-risking something that makes sense? Especially if you're on leverage, right? I mean, if you're on margin with a lot of this stuff, then I think it even gives you a better opportunity to just de-lever and not get super greedy and take some of the gains. See a decent amount of people saying yes, 100%. Depends on taxes. Yes, yes, yes. Sure. Swing a portion. Yup. Yes, I have 13,000 shares. I would take a little bit off the table. Yeah, I mean, again, it really depends on everyone's trajectory and their own personal portfolio, but I don't think it's crazy because then the question here's the thing. Let's say we pump to all-time highs going into the end of December, early into January. What is the upside? Right? Like Nvidia 200 in January. Are we just ready to normalize 200 and our upside is, 220, 230 and then we just keep going higher? Or do we once again have something stupid happen like a shutdown, which is being priced at 35%? I mean, that's not an insignificant odds of getting a shutdown happen again, which obviously is going to affect the markets because we know that it's going to affect the markets, especially if it's something that's going to affect GDP growth, which Q4 GDP already ended up taking a hit. And then you get these asset prices that just take a breather, especially if we don't get a rate cut until June. I mean, or April. I mean, right now the January probability is only at 20%. April's at like 40%, but they're not guaranteed for next year. Now, maybe the labor market data is bad enough to kind of guarantee them, but if they don't, I don't think it's crazy to de-risk a little bit. Now, getting out of the market completely and going net short, I think that's just kind of dumb. I think the bears are way too cocky for next year. I mean, all of us are sensing a little bit of weakness in the AI trade just from the exhaustion of the market. But the bears are trying to fight the Fed here. They're trying to fight the Fed. I don't think you easily fight the Fed, especially a dovish Fed like Jay Powell, especially a Fed that's not going to have Jay Powell soon. So de-risking is one thing. Getting out of the market and going straight cash and just waiting for some cataclysmic crash, that I think is way too risky. Because, and here's the other, thing that makes it very hard to completely get out of the market. Earnings still should be really good. I mean, we forget that Q3 earnings were phenomenal. There was a handful of companies that had a crappy earnings. Outside of that, every single company, I mean, Oracle and Broadcom, even if their earnings calls weren't good, they both had amazing numbers. I mean, Tesla didn't have the best numbers, but nonetheless, Tesla is Tesla. So we can't necessarily say Tesla is emblematic of a horrible earnings cycle. But, Tesla's making a lot of actual progress in terms of getting what they need to get into the real world to make robotaxis succeed. But Amazon, Google, Microsoft, Meta, Meta outside of that whole tax thing and the call about ROI on AI CapEx, all these companies Meta grew 26%, which is insane for a company of their size. Crazy. Apple is guiding for the best Q4 in history at 12% revenue growth, or at least in the last 5 years. So I think another natural hedge to the market collapsing next year, or at least having some dramatic drawdown, is like the earnings growth is still going to be so strong. And the multiples are not inconsistent with the earnings growth. Again, Nvidia trading at less than 25 times and 50% of Walmart and Costco's multiple is not euphoria. If Nvidia was trading at 50 times next year's earnings, then I get it. Like, yes, Nvidia is susceptible to, if they have any little thing that's an issue, it's coming down. But that's not the reality of what we're seeing right here. So I do think earnings growth should be a continued hedge to keep the market higher as well. Yeah, Warren Buffett is gone next year. That is true. He will not be managing Berkshire. Dude, did we talk about the guy who left Berkshire for JP Morgan? Greg Abel, right? No, Todd Combs. Yeah, I think that was on Monday. We talked about that. So Berkshire did lose one of their core fund managers for JP Morgan. He's going to be leading a strategic investment group. But you will have a Berkshire that doesn't lead, that's not being led by Buffett, and Google is now a $5 billion position for Berkshire. So potentially a new life cycle for technology as well. Was there Japan news over the weekend? I didn't see any major Japan news. The big Japan news is the rate hike that is likely happening on Tuesday. They're going to be hiking rates to 0.75%. December 19th. What is that, Thursday? No, Friday. Okay, Friday. So, yeah, the street already knows it, though. The street knows that Japan is going to be raising the rates. So I don't think that's necessarily something that should be like a yen carry trade 2.0 because it came out of nowhere. Remember, yen carry trade, people didn't know they were hiking. So when it happened, immediately it shot the yen up and then people had to sell to cover their short. But the yen's been shooting up over the past couple of weeks anyway, and we've seen the effect on Bitcoin, given it's fallen from 126,000. So I don't think a yen carry trade 2.0 happens randomly when everyone knows they're cutting rates. So I don't think it would be that big of a deal. The Hood event is on Tuesday. That's going to be a big one. So I think that's at 5 p.m. Eastern. So I'll be streaming that live. It's going to be about prediction markets and AI. Very, very excited to see, especially what they're doing in prediction markets. Obviously, that market has grown massively for Robinhood. So I think this is the opportunity for them to take advantage of the fact that the market's growing so fast that they need to really push out innovative features to make sure that market continues to grow for them. Bitcoin right here, 89.3, getting to its highest level of the overnight market so far. So yes, that's going to be very important for Hood going into the end of the year. China retail sales up 1.3% year over year. China November unemployment rate 5.1%, matching expectations. China fixed investment fell 2.6% year over year. Are the Chinese stocks down on some of those stats? The Chinese stocks are down. Not crazy, but BABA's down. JD is down. That's not even that big of a deal, though. Unemployment is in line with expectations, 5.1, and then retail sales 1. Well, the street expected 3% on retail sales. That's why it's down. Yeah, K-Web should be down. That's not that crazy. Chinese stocks have still had a pretty good year. I mean, BABA year to date is what, like 50% year to date? Yeah, 83%. China's outperformed the US. I mean, pretty much every stock market has outperformed the US this year, including Japan, China, and Europe. Silver and gold have also outperformed the US this year. Look at that. Silver and gold still moving. But it goes to show that the US is the center of the AI trade, and the most important AI stocks are not really trading at like premium multiples simply because of the fear of AI, which again is bullish because that's the wall of worry, which inevitably allows us to grind higher over time. But it's also part of the reason why the US is not outperforming. How is India doing this year? India is definitely not outperforming the US. I don't think so. Yeah, the Nifty 50 is not outperforming the US this year. Yeah, US is smacking India. India's had their own political issues. That's not necessarily been the best. But overall, the United States has been relatively strong. Bitcoin getting a little bit of a move right here. Look at that, 89.4. Same with ETH. It was at 3,200 on Friday. Now it's at 31, so we're not that far away. It was almost below 3,000 this morning. So Bitcoin right there at 89.4, and then ETH at 31.3. Okay, I think I have a couple of other charts I wanted to show. Oh yeah, I saw this over the weekend. I've never seen this. I just want to show you guys this because I don't know how many people have seen this, but this randomly popped up over the weekend. And I think it was just crazy to look at. We talk about GPUs and chips all day, and like, you know, the entire world is revolving around these GPUs. Take a look at this video that describes what an Nvidia Blackwell GPU actually looks like. I just thought this was fascinating for us to all see the level of technology that's being created and all the companies that are mentioned in this video that help create the technology for AI to actually become a thing.
Blackwell is an engineering marvel. It begins as a blank silicon wafer at TSMC. Hundreds of chip processing and ultraviolet lithography steps build up each of the 200 billion transistors, layer by layer on a 12-inch wafer. The wafer is scribed into individual Blackwell die, tested and sorted, separating the good dies to move forward. The chip-on-wafer on substrate process, done at TSMC, SPIL, and Amkor, attaches 32 Blackwell dies and 128 HBM stacks on a custom silicon interposer wafer. Metal interconnect traces are etched directly into it, connecting Blackwell GPUs and HBM stacks into each system and package unit, locking everything into place. Then the assembly is baked, molded, and cured, creating the Blackwell B200 superchip. At KYEC, each Blackwell is stress tested in ovens at 125 degrees Celsius and pushed to its limits for several hours. Back at Foxconn, robots work around the clock to pick and place over 10.
This is crazy. Like, just seeing the level of technology that's going into these chips before they get sold to the hyperscalers is just wild. And the level of transistors and the trillions of different parts that are incorporated into these chips, I mean, it's just quite phenomenal.
Back at Foxconn, robots work around the clock to pick and place over 10,000 components onto the Grace Blackwell PCB. Meanwhile, additional components are being prepared at factories across the globe. Custom liquid cooling copper blocks from Cooler Master, AVC, Auras, and Delta keep the chips at optimal temperatures. At another Foxconn facility, Connect X7 SuperNICs are built to enable scale-out communications, and Bluefield 3 DPUs to offload and accelerate networking, storage, and security tasks. All these parts converge to be carefully integrated into GB200 compute trays. NVLink is the breakthrough high-speed link that Nvidia invented to connect multiple GPUs and scale up into a massive virtual GPU. The NVLink switch tray is constructed with NVLink switch chips, providing 14.4 terabytes per second of all-to-all bandwidth. NVLink spines form a custom blind-mated backplane, integrating 5,000 copper cables to deliver 130 terabytes per second of all-to-all bandwidth. This connects all 72 Blackwells, or 144 GPU dies, into one giant GPU. From around the world, parts arrive. From Foxconn, Wistron, Quanta, Dell, Asus, Gigabyte, HPE, Supermicro, and other partners to be assembled by skilled technicians into a rack-scale AI supercomputer. In total, 1.2 million components, 2 miles of copper cable, 130 trillion transistors, weighing 1,800 kilograms. From the first transistor etched into a wafer to the last bolt fastening the Blackwell rack, every step carries the weight of our partners' dedication, precision, and craft. Blackwell is more than a technological wonder. It's a testament to the marvel of the Taiwan technology ecosystem.
So when you ask an LLM a question, it's going back to that thing that we just saw in order to give us an answer. Like, it's crazy, dude. And that's just Blackwell. We got Vera Rubin coming up next year, which is going to be supposedly much faster and even more advanced than Grace Blackwell right now. So it just, sometimes when you see stuff like that, you remember that, you know, we're sort of like abstractly discussing Nvidia chip sales and like AMD and ASICs, but like the actual real technology and the hard work that goes into building that stuff. And then Nvidia somehow inks out a 73% margin on all of that. It goes to show you how incredible of a company they are and how much pricing power they have. Same thing with Broadcom and AMD, right? Like the ability for them to actually generate revenue and profits on what is very, very complex supply chains. It also shows you how it's not that easy for it to be replicated. And as bullish as TPUs are for Google, to be able to replicate that type of supply chain at scale and then deliver it to millions of customers is just not the easiest thing. But that's what NVIDIA is doing, and hopefully that continues to scale. But yeah, then Burry comes out and says depreciation, and then it all becomes, and then the market falls $1 trillion in market cap. That's what also makes it funny. It's like you see that in front of you, and then you have a guy that says, yeah, but depreciation, and then boom, market's like, yeah, none of it's real anyway. Which again, I think are just going to be opportunities for us long term as well. Do you ever think about the implications to the environment with all this AI build and electricity prices? I think there's going to be implications for a lot of things. Obviously, electricity prices for people's home bills is one thing. There's probably going to be environmental concerns. I don't know. I mean, I think with the environment, a lot of it comes down to capitalism in general, and the necessity of growth is always going to be at odds with the philosophical desires of people who want to keep the environment safe or not necessarily affected by greenhouse gas emissions. And so, I don't know. I just philosophically, I don't see how in a capitalist economy we can meaningfully say we care about the environment when, in order to grow, the environment's going to have to, like, in order to ship the parts from Taiwan to Foxconn in one of the Foxconn factories in the United States, you have to put them on a plane. On the plane, there has to release greenhouse gas emissions. When it gets to the factory has to also use energy to make the part. Like, how do you put a limit on that? What's the bright line on that? How do you philosophically say what we're allowed to have a bright line on or not allowed to have a bright line on? And then if you arbitrarily say, all right, we're not allowed to grow this much, and the economy goes down, we're going to have a lot bigger concern about people and their ability to survive if the economy goes down. And that's going to be a different environmental challenge if people, can't afford to pay their bills. So I don't know. It's not even that I'm not sympathetic about the environmental concerns. I've just kind of decided a long time ago that capitalism and the idea of growth is incompatible with trying to be saving the environment, because you need to grow to save the environment. Like, this YouTube stream is using energy from a data center right now that's hurting the environment. So is YouTube supposed to say, hey, you can't stream? Well, that's going to hurt Google's business. If that hurts Google's business, that's going to hurt people's retirement accounts that have Google stock. And it's a very convoluted system that you end up on one side or the other. But I think the growth side for capitalism seems to be the better side, even though it obviously can still affect the environment. Google. Oh, speaking of Google, yes, Google did get a very nice return on SpaceX. Next, so because SpaceX completed the offering at 800 billion, Google's going to print probably another 40% EPS beat like they did 2 quarters ago on their SpaceX stock. So pretty bullish for Google based on what's going on with SpaceX. And next quarter, it looks like if this SpaceX thing is official, then yeah, Google's going to have another massive EPS beat as they hold I think it's like a $50 billion stake now in SpaceX, which is, I think, about 9%, and pretty incredible. Retail sales data Tuesday, jobs report Tuesday, CPI for November Thursday, PCE on Friday, existing home sales on Friday, and then we get consumer sentiment and Michigan inflation expectations on Friday. So we do have a lot of macro data this week. I think the CPI on Thursday and the jobs report on Tuesday are going to be the most important things that we have to look for. But those are going to be kind of the main metrics that at least I'm going to be looking for, and hopefully, they don't disappoint. If CPI comes in better than expected, that's bullish. If the labor market is okay but not horrible, then that's also bullish, because we're probably still going to get a rate cut, but hopefully that doesn't hurt earnings growth if more people are unemployed. When in 2026 will they go public? Okay, so that has not been disclosed, but it has been reported widely that they're definitely going public. I don't know. When do you guys think they should go public? I think they should do it as quick as possible, because you don't know what could happen in the market cycle. Right now, it's hot. People want to own SpaceX. Retail is going to bid the hell up out of it. I mean, you definitely shouldn't do it after we have like a 10, 15% decline if we end up having that. So I would say they need to do it as soon as possible. Like February, March, they should go for it. They should go for it when people have the money to spend. And right now, people have money. Yeah, it said 800 billion. So the tender offer was 800 billion, not 1.5 trillion, which, look, is more reasonable. Bloomberg said 1.5 trillion on Wednesday. I was like, there's no way in hell. Like, you cannot have a $1.5 trillion IPO. Now, maybe it's above 800 billion, but the tender offer this weekend was at 800 billion. So if the IPO ultimately is going to be 800, 850, that's more reasonable than 1.5. At 1.5 trillion, I think you have zero upside, at least in the short term. At 800 billion, I mean, this thing going to a trillion seems kind of inevitable the day of IPO, simply because of the fact that it's going to get pumped. Now, does it stay there? Who knows? But at least there is some baked in upside. So I think they should do it like very soon. Right after the tariff stimulus. Are we still getting our stimmy checks? Are we still getting any tariff stimmy checks? It would be nice to get those, even though I'm not getting it. I think a lot of people in the chat are probably not getting it either. But yeah, I don't know, dude. I don't know if we're getting our tariff stimmies. Trump did talk about tariffs over the weekend, and he's happy that they brought in a lot of money, which they have. But I don't know if that means that money is going into a $2,000 stimmy check.
To an extent, because without the November 5th election, you would have had a president that didn't have the courage to use tariffs the way they should be used. And because of the tariffs, we've taken in more than think of this, $18 trillion. There's never been anything like it. As to an extent.
I don't think it means 18 trillion in revenue, because revenue is about 350 billion. I think he's talking about overall investment of 18 trillion. I don't know where the 18 trillion number comes from, but I don't think it's direct revenue. So yeah, I think he means the deals that we've had because of the trillions in tariffs, or the deals from the tariffs that have resulted in trillions of investment. But yeah, I don't know if those $2,000 checks are going to be put out there. Here's an idea I also want to float by people. This is super random, but I saw this over the weekend. I thought it was compelling. I'm going to put it out there. I'm not taking this trade, but I do think there is an argument right here. Snappy chat. Snappy chat, snappy chat, snappy chat. Here's what Snapchat is doing now. If you have over 5 gigabytes of memory in your Snap folder, you now have to pay $2 a month to Snapchat for them to hold all your storage. Now that sounds like it's not that big of a deal, but when you think about it, and I thought this analysis was pretty reasonable, they say the vast majority of their users, they have about 1 billion users, have over 5 gigabytes of data in their saved memories. They just rolled out an ultimatum of you either pay $3 a month for storage, or, and this is the big part, you lose all your memories. Now, I have Snapchat. I have a lot of memories from college. I don't think I have anywhere near 5 gigabytes. I have to check, but I don't think I have that much. I will say there are certain random days where I go back into my memories, I think like a lot of people, and you kind of see some of the stuff in your Snapchat folder, right? It's different from your camera roll because a lot of it's on your like actual Snapchat app. And you don't want to lose those memories, just like you don't want to lose like your playlists on Spotify, even if you don't listen to those playlists anymore. You don't want to lose those memories. So if you assume just 10% of DAUs, which would be about 40 million people, pay this, that gets you about 600 million of an instant boost to EBITDA and free cash flow. And so even if you don't use Snapchat anymore, but you have a lot of photos in there, it does seem like this $3 tier on a 10% DAU ratio adopting it would print them a couple $1 billion extra of revenue per year and about $500 million in free cash flow. Now, yes, people saying, can't you just download it immediately into your camera roll? Yeah, you could, right? Like this is really stupid. I'm just bringing it up because I saw it over the weekend, and I'm like, it does make me think a little bit. How many people would see that and get so scared that they're going to lose their memories that they would take the time to individually download like 50 gigabytes of their college years on Snapchat into their iPhone? I mean, maybe people will do that. I would do that if I have like 6 gigabytes of memories and I'm a gigabyte above the 5 gigabyte limit. But if you have like 100 gigabytes, where there are some power users of Snapchat that just love using it, you would just pay the $2 a month, right? Or the $3 a month. Like it wouldn't be that big of a deal, especially if you're like if Spotify increased their subscription by a couple bucks and your all of your music memories are stored in Spotify playlists, you're probably paying the extra couple bucks. So I don't think it's that crazy to imagine that consumers, Bitcoin right here trying to get back to 90,000, would pay for that. I wonder if it would have a meaningful impact on Snap's bottom line. Snapchat right there, up about 1% overnight. The funny thing about this as well is this is all marketing, because there's no way in hell that Snapchat's cloud computing costs are getting to the point where they need to limit users' memories and storage. I mean, cloud computing and like AWS S3 storage for these tech companies is pennies. And the ROI they get from people using the product over and over, which is why they give them unlimited storage on Facebook and Google, et cetera. Google's a little different with Google Drive, but Facebook's never really charged you for storage because Facebook knows the more you keep posting, we can handle the little megabytes of your photos, but the advertising revenue we make of you keep posting photos, we don't want to stop. So this is not like Snapchat has to charge people $3 a month because they're like trying to get more efficient on their cloud storage costs. This is like just, I think, a gimmick to find a new form of revenue. And it's relatively smart, in my opinion. I just wonder if there's a trade to be made there. But I feel like we need more data on how many people would actually convert. Because, you know, if you take that trade on that thesis, you would need a really good hunch that hundreds of millions, at least tens of millions of people would pay that stupid $3 a month. And what gives me a little bit of sympathy for that argument is that Snapchat has this like Snapchat AI product, which is also like $5 a month. They have 7 million people paying for it. I don't know what 7 million teenagers use their parents' credit card to pay for some Snapchat AI bot that they could use ChatGPT for free for, but they're paying for it. So you might just have a lot of kids that just say, oh my God, I'm going to lose my memories. I need to pay for this. And then they end up paying the $3 a month and then boom, that's what ends up happening. Bitcoin, 90K. Ethereum, 3,100. Now we're getting a little bit more of a bigger move after hours. Tesla up 1%, S&P up 0.3, Apple's up 0.14, Palantir just went green. Nvidia's up almost 1, Hoodie at 120.5. Even Broadcom still red, but not as red as it was before. Disney's up a little bit as well. Rocket Lab, nice move, 3% right here. So you are getting the futures get a little bit of love, 683.33 on the S&P. I don't know. Would people pay for the memories for Snapchat? Let me check mine. I don't even think I qualify to pay for this much. Yeah, there's no way I have 5 gigabytes of... I mean, I stopped using this thing years ago. So... But I could imagine some kids just freak out because they don't want to lose their memories. And then boom, they freaking... they just pay for it. On December 14th, 7 years ago, I was in a library studying for finals with Starbucks. Ironically, I had Starbucks today. I actually got hot chocolate for the first time in a while. Which their hot chocolate's not that bad. It's not that bad. It's actually a smart idea. I agree it's smart. I just wonder how many people would pay. Bob says, I have a lot of memories on Snapchat, stuff I find valuable. Yeah, I think there are some people that would end up paying for it. Bullish SoFi on the student loan stuff. Yes, I think... Look, the SoFi, I mean, there's been some rumors about the federal government potentially offloading a lot of their private loans to SoFi as well. That would be a massive catalyst for SoFi. I don't know if that's going to happen. Maybe that's the reason they raised $1.5 billion in debt, because they're getting ready to handle a ton more loan originations with student loans. I mean, we still don't have a real reason why they raised that money. SoFi right there, 27.33 after hours. But I'm hoping Noto has somewhat of a plan for this. All right, I think that's pretty much it. I don't think we have any other crazy headlines today. Be very curious to see what we get going into the end of the year. And these are the last 2 weeks of the year. These are supposed to be the most bullish 2 weeks of the year, folks. So these are the 2 weeks where, if we're making a run for it, we're going to see if we actually make this run. What do you think of Camilo's thesis on Bloom? I know he did a podcast on it over the weekend. I have not watched it yet, so that is on my list because I do want to look at Bloom. I know a lot of you guys like that ticker. A lot of the energy stocks took a beating on that OpenAI data center news. But yeah, I will. I was actually texting with Camilo over the weekend, so I will listen to that Bloom podcast. Doer says, congrats on expanding your team limit. Did you get bombarded with emails after Friday's stream? Yes, got a ton of new emails. A ton of you guys signed up for the meetup. So very, very excited for that. Again, I'll put the link right here in the chat. I'm excited for it, dude. I've finally put in some actual structure and organization to managing my life outside of just doing everything on my own. And yeah, I think it's needed. It's time, dude. There's just a lot of stuff going into next year, like a lot of planning, a lot of different ways to take things to the next level, and just having some support there is really, really important. And also having some support with someone you actually want to work with and that can be part of the community, I think is really important. So most likely, guys, I will be at CES in January. So Vegas, I will be there. We're not going to do a meetup or anything, but at least not yet in Vegas, but I will be there. So we'll have some CES stuff to do. Never been to CES before, so it'll be my first time. And shout out to Nvidia. I didn't know they were going to do this at all, but they ended up posting a snippet of my clip on the official Nvidia account with the podcast I did with Justin and Kevin. Justin from Nvidia, Kevin from Palantir. This is one of Jensen's 30 direct reports, and then Kevin leads sales at Palantir. So this was super cool to see. And so, yeah, just got a lot of work going into next year. But we got to keep grinding. We've got to keep grinding. I'm sure I'll see a lot of you guys at CES as well. It's a pretty big event, dude. It's like tens and tens of thousands of people that ended up going there. Are you going to interview Jensen? Not at CES, but hopefully eventually. I'm trying. I am trying. I think we can get Jensen next year. I don't know how it's going to happen or when it's going to happen. But I think there's a shot. So it'd be very, very cool if we could if we could get Mr. Jensen. That'd be just awesome, dude, to talk to just for him to be alive during this lifetime and to get a glimpse of how he thinks about the world. Because you hear it from all these other people, but like actually getting to sit down and talk with him. He already has it scheduled. He's trolling. I actually don't. I really don't. Part of the reason I'm going to CES is to, get closer into the Nvidia ecosystem, and hopefully maybe that gets us a chance to interview Jensen. But I want to see the new tech at CES. I mean, at the end of the day, this is the stuff we're investing in. And so I know Nvidia is going to have a booth there. A lot of these tech companies, semiconductor companies, are going to have booths there. So it'll just be really cool to see all that in person. But that would be really fun to talk to him. Buy a GB200. I should do that. All right, I think that's it. I think that's what we got. Nothing else too crazy for this week. We don't have any earnings this week, right? No, we do. We have FedEx and we have Nike. Yeah, that Nike insider buy the other day, $1 million. So maybe that's a signal. And then Micron. Nike, FedEx, and Micron. Carnival Cruise as well. Nike, FedEx, Micron, and Carnival Cruise. And those are going to be the ones that we'll look at this week. Chris's channel, let me put it right here. It's Dumb Money. That's their latest podcast, right? Their latest podcast, I think, was Bloom Energy. So, yeah, here's the link to that if anyone wants to watch it. But this will be one to take a look at. Any meetups in Boston? So we did Boston last year. We might do it again this year. I think the next one, which we're already started planning after New York, is going to be LA. So for all my LA folks, trying to make that happen, hopefully end of March. And we'll have updates on that soon. But yeah, Los Angeles seems like the next one after New York. And we did Palo Alto last year, so I kind of want to do LA this time because we already did the Bay Area. Even though I love the Bay Area, probably will be there again soon. But when's the last time I've been to LA? I don't know when's the last time I went to LA for fun. I think it's been a while. I've been to the Bay Area a bunch. But LA, it's been a minute. We will definitely do Toronto. Definitely make Toronto happen. Toronto's also close, so it's easy to do that. But we did Toronto this year as well. So it's not like we didn't do that one. LA should be fun though. LA is always a fun time. I don't think I could ever live in Los Angeles though. Although for those people in the Northeast, at least in New Jersey, New York. So last night before I went to sleep, I looked outside. And it was snowing a little bit. I was like, wow, we got a little bit of snow. We haven't seen snow in a while. This morning we woke up 6 inches. pure snow. And I'm just like, I know 6 inches is not crazy, but still, like we haven't seen that much snow in a long time. And as much as I love the Northeast, I am so done with the snow. I am so done with the cold. Like the cold is just inconvenient. It's just inconvenient. Like it just feels worse when it's cold. And I really love the Northeast for the seasonality, and I kind of like that it changes the seasons. But I also am starting to hate it. Like genuinely, I'm starting to hate it, and I'd rather just like be somewhere that's warm all the time. So I don't know if like I would ever move anytime soon because I just love New York City too much and being close to it. But I hate the cold. Like I'm not a fan of it anymore. It's not fun for it to be cold. 65 today in San Diego. Yeah, like San Diego, that's beautiful. Like how amazing would it be to wake up every morning and be in San Diego? No, Houston gets too hot. That's you guys. Houston is ridiculous. Houston's like freaking 110 degrees in the summer. But LA, San Diego, that peaks out at like 75, 80, I think. I don't know. I just hate the cold now. I hate the cold. That's why I've been wearing my scarf more recently as well. Florida, no state income tax. That definitely makes Florida more attractive as well. Look, I loved Miami when I went to Miami. I absolutely loved it. Miami was amazing. I could really see myself living in Miami. Not anytime soon. Because again, I just think for this part of my life, I need to be close to New York. Like New York is just where the action is. But my goodness, that I love Miami. Absolutely gorgeous. And the weather was amazing. Seasonality argument is pure cope. It's definitely pure cope. It's absolutely pure cope. But still. All right. Is that it? Are we done? We'll be back tomorrow morning, market open. We got the Robinhood event this week. I did interview a Hood executive on Friday. That'll be out after the Robinhood event. I think you guys will enjoy that one. That should be fun. I think that's it. Is Steve about to go live? Can we spam Steve? Steve going live? Is he doing alternative assets weekly? No, he's not. Okay, so we can't spam Steve today. Dude, these thumbnails from Steve. Look at this thumbnail, bro. He's the reason why the power goes out of my business, in my building. Look at this thing. You got Matt and Chris, Sunday afternoon coffee and stocks. That legit looks like Matt and Chris on a thumbnail. How much energy was used from Gemini to make that damn thing and get it uploaded? It's a great thumbnail, but it's causing an issue for energy prices. Yeah, 3 hours, dude. Matt, Chris, and Steve. There you go. Nice little coffee and stocks powered by Gemini there. He's loving Nano Banana, 100%. For those that want to watch that, I'll put the link in the chat. But he is loving Nano Banana. Also, I think I heard a little bit of him either on Friday or Saturday. Maybe it was today, but I think Steve's getting interested in VG. I think Matt and Chris got him on the VG train. So we might be getting Mr. Steve into Venture Global Venture. It's up 2% overnight, 627. So we'll see if we get him there as well. All right, that's it. Thank you, everybody. Appreciate everyone being here. Hopefully everyone had a good weekend. I'll be back on the market open tomorrow. And again, thank you all for the love and support on the manager stream. I read all the comments over the past weekend, and a lot of people were just really excited for the progress, the excelling of whatever this turns into next year, and just have a lot of different ideas. And it's always cool to bring more people onto the team and kind of help support the economy and be someone who can actually help people make a living. And so that's just really cool from my perspective. But the only reason I'm doing it is because you need to actually move the business forward. And so we're going to see what we can do in 2026. Should be very exciting. And we're going to keep it going from there. Again, for the Meetup link, I'll put it right here in the chat. I have a new email as well. I'll put the new email in the chat. It's amit@akcoms.com. And then for Jess, it's jess@akcoms.com. Realistically, I'd rather you message her than me because it'll be easier for her to see the email and screen it. So for anyone who's been trying to get in contact for anything, whether it's podcast, any random inquiries people have, this will be the email that can really get the response and get things going in the right direction. Also, a lot of Substack articles coming out this week. I owe you guys a lot of articles. Last week getting sick kind of ruined it, but been working hard about 4 articles that should be out this week. So we got a lot of Substack content coming this week, and that should be out closer towards the end of the week for people to check it out. All right. Thank you, everybody. Have a good one. I will see you guys on the market open, and we'll keep going from there. Thank you, everybody. Good night. Have a good one. See you guys tomorrow on the market open. Bye, everybody.